All right. Welcome back to another episode of the Real Estate Investing Club. As always, bringing that Friday energy to you guys. I hope you guys are having a great day wherever you are. I know the last couple of episodes we have been recording from my laptop because we've been moving. Well, it is a good day because we are officially moved. I am in my new office, and so things couldn't be better. I did have a little bit of a technical hiccup getting in today, getting the guest in, getting my mic set up. So, you know, it's par for the course, but it's going to be a good day today because we have Hunter Thompson with us on the podcast. Hunter wrote Raising Capital. He's from raisingcapital.com. He is the founder of Asim Capital, and he hosts the event Raise Fest. So for all you guys out there who want to raise capital for your deals, this is the episode to listen to. Raising capital is one of the most difficult steps to master once you get to the stage of bigger deals that you can't take down with your own money. And so this is the episode to listen to if you guys want to start taking down bigger deals. Hunter, I am super excited to jump into this. Thank you very much for hopping on the show.
An honor to be on. Thanks a bunch.
All right. I told you before we got on here, we always like starting with stories. We like to hear how people got to where they are. So why don't you take us to the beginning of your story in real estate and tell us how you got here?
I've been creating some YouTube content recently, and it's forcing me to kind of get out of my comfort zone and talk about some stuff that I haven't talked about before and kind of dissect my story and how I got to where I am today. And it's kind of, there's two paths, right? Like one piece of me is in school, like for example, I was a slacker. Like I did the bare minimum to get by. I remember in college studying for a microeconomics test, and I found out that I had to get exactly a 76 to pass. And so I literally got a 76 on
arguably that is harder to actually achieve a certain grade on a test versus
exactly
100%.
That's what I was going to say. I literally there was 100 questions, multiple choice. I literally got 76. So in my mind, I remember it was as if the Billy Madison scene, I am the smartest man alive, just doing the minimum amount of work to get by. There was that part of me, but there was another part of me that was like hyper focused, obsessed about entrepreneurship. Music was a big part of my life. I took it extremely seriously. I was in a band. Like we did shows before I could even drive. I was very into running and cross country and didn't go to college to do those things, but it was part of my identity was I was a freaking runner. And so I kind of look back and it's like, I just wasn't really cut out well for the typical academia route. But the moment that I got out of academia, I realized what making money was actually about. And it's not about being kind of good at things. It's about being very good at one thing and being known for that one thing. And being lukewarm at anything is not interesting and also not useful in the marketplace. And being obsessed and interested and taking it to the next level and being more intense about it than everyone else, that was my background in a lot of things outside of school. And so I just took that intensity and applied it to real estate. And I was very fortunate being able to graduate college in the heart of the Great Recession, met the right mentors at the right time, went all in when everyone was telling me that it was not smart to do. And here we are today, right? And so there's so much embedded in that. But like, if you're listening to this right now and you resonate with that story, like we've got something in common because I'm a confident person and I always was, but it got to me thinking that I was a slacker and thinking I wasn't going to accomplish great things and thinking that there was a mental income ceiling on how much money I could make or how successful I could be. And it's all just not real.
Yeah. Yeah. I like that you said your light bulb moment was when you realized that you just had to be good at one thing. And that's
Yes.
something, especially when you're starting a business, you feel like you have to be good at everything. You have to be good at acquisitions. You have to be good at raising capital. You have to be good at, operations, everything. But that's really not the case. You have to master a single skill set or a single, focus. And once you do that, that's when you start to, the ball starts rolling, you start to see success. So I like that kind of was your light bulb moment. And you also mentioned you kind of at the end of your story there, you kind of said, you bunched a whole bunch of things into one, but in there was you mentioned mentors. It was right place, right time kind of thing. You had mentors. That is something that I wish I had more of when I got started in real estate. I joined courses. It was Matt Theriault. I had his course and I did the online thing, but I never really had an in-person mentor until later. Why don't you tell us that experience of like just getting your first deal done, getting into the game, and how the role of mentors helped you in that?
Well, a couple things. Number one, you got to take what you've got and just maximize it, right? So for me, it was easy for me to go right when everyone was looking left. That was just something that came natural to my personality. So the fact that people were saying, "Hey, don't you know there's a foreclosure tailspin taking place in the economy?" I'm like, that was nothing to me. I was like, this is the time that I've been reading about with all the Warren Buffett books and all the Charlie Munger. This is clearly one of those opportunities. Now, the other side of that is easy for you to say, kid, because you're graduating college. You didn't just get wiped out. And I get that. Now, as a recent college grad, I didn't understand, why is no one seeing this opportunity?
Mm,
Sometimes people are seeing it. They're like, we're going through a foreclosure. We are
mm,
going through a divorce because of financial trouble. Like, I didn't fully grasp that. Now maybe I do. I'm a little bit older. But the point is, you got to take what you've got. And at the time, I had hubris and didn't get wiped out, and a huge opportunity was sitting in front of me. Now, the next piece of that, though, is that going all in when everyone is retreating, you all of a sudden are around only the people that survived. And so my mentors were like really savvy and some very well-known investors and active owner operators that implemented a strategy that I came to know as syndication.
mm.
And they were able to buy more quality assets that had more favorable debt terms. They had more units and therefore more tenant diversification. And so I was very fortunate in the sense that my first mentors were people that are playing the game at the highest of levels. And I skipped a lot of that because of that. I was just always trying to play bigger and play bigger. And to me, the world of syndication is the biggest game in town. And so those were the first deals I did, first as a passive investor and later partnering with operators and first creating a fund of funds for other operators. And that was the first, you know, deals I did were structured like that, where I was deferring to someone else's expertise, but that allowed me to be diversified into mobile home parks, self-storage, office by finding great operators and partnering with them.
Got it. Okay. So you have focused your entire career only on the capital side, only on raising the capital. Have you, is that correct?
It was the first part of my career. In 2022, we pivoted our business to now buy deals directly. And so
Mm.
now all we do is buy multifamily just in Phoenix. But that
Phoenix,
was,
interesting. Okay.
yeah, that's right. So, and I can talk more about that, but generally speaking, the beginning of my career was very focused on diversification because my mentors, the lessons of 2008 was be diversified. So I
Hmm.
used that as my true north for the first, 10 or 15 years of my career. And at a certain point, diversification is at odds with some other things that are helpful in
Yeah.
business. Not to say that these aren't good things, but I'm just a normal person. So if you have a true north that's diversification and you go towards that eventually, you give up things like economies of scale and rinse and
Mm.
repeat and
Hmm.
using the same software over and over again. And so
Yeah.
you have to make decisions in business. And we made the decision to forego diversification for hyper specialization,
Yeah.
and that resonates with some investors, and some investors that want diversification can, if you want to do self-storage, you can go and maybe I'll make some introductions. But for us, we just do multifamily in Phoenix.
Well, I feel like that is also, there's so many rules and axioms in business that you should be following, but it's really, you have to apply it. They only apply to a specific time in your career, in your business career.
Yes.
Like
Yes.
diversification, it is a good thing generally, but if you, I ran into this myself. I was trying to diversify geographically, and when you do that, you're really missing out on having this, building a strong team in a specific area, and building it. And once you do that, once you build your team, you can start to get the economies of scale. You can grow faster, and you may not be diversified geographically. You might be just in one city, but you are you're gaining speed because you don't have to you know recreate the wheel every time you go to a new city. So I like that you said that, diversification is great, but it you need to look at what stage you're at in your career and what makes most sense. And so it sounds like for you, you got to a stage you're like, we need to kind of plant roots. We need to build a team in a specific locale, and really start doubling down on syndications. You chose Phoenix. That's interesting. I'm curious why. I don't want to go too far into this because you are the raising capital guy, and I want to talk more about raising capital. But you said Phoenix, so I have to ask. That's a unique choice. It's not a lot of investors are focusing multifamily in Phoenix. Why did you choose Phoenix?
I'll keep it brief. So we had a very good spectrum of what was out there,
Hmm.
right? Because of our contacts and my relationships, and I've worked with some of the best groups in the country. And so we looked at not only just multifamily, but self-storage, office. Hey, it's going through a recession in office. Maybe we should go all in. There's retail, there's non-performing notes. Like we've got great contacts across all those metrics and all those verticals. But I personally just think the tradability of the asset class of
Mm,
multifamily, the savviness of the players is something that resonates with me and speaks to my skill set. And so I would rather be working with people that stand to gain millions of dollars and are very competent than having this massive market advantage, but all the players aren't making a ton of money, and I'm just relying on less skilled or less savvy labor, this, that, and the other thing, less savvy lenders. It's just like it's a personality thing, right? It's just a
mm,
matter of what you want to do. So then within that, it's like, okay, where are we going to go and plant our roots? And so we looked at Florida and Texas and
mm-hmm,
Arizona.
mm-hmm,
And again, I'm bullish on those markets, but
mm.
just starting from where do you want to go on a map? Look, there's no hurricanes in Phoenix. Because of that, there's no massive insurance increases in Phoenix.
Yeah.
There's also property taxes in Phoenix are limited to 5% per year.
Oh,
So
that's
it's
good of them.
really, really compelling. And then you've got just the booming population growth and booming job growth and booming income growth. That's not
Mm,
anything new, but the unique things about insurance costs and property taxes, which have been a big part of the story over the last couple of years, is
mm.
just not a factor as much. And so we had already done several deals in Phoenix and decided, let's just go for it. And my partner moved there and we haven't looked back since.
There you go. Yeah, I'm in main market is Texas, and property taxes are just crazy. I don't
Yeah.
they just get you out there. But yeah, Phoenix. I mean, I know some people who invest in Phoenix, and it is a great market. I've always been nervous about. I just feel like they don't have any water out there, and it's
You know
just
what?
that scares me. I know it's irrational, but that scares me for some reason.
It comes up all the time, but in a second we'll probably talk about raising capital, and that's something that I've dealt with, and that question's come up. But generally speaking, I'll put it this way. Um, the largest international investment in the history of America is happening right now in Phoenix.
What
It's
interesting.
$65 billion, Taiwan Semiconductor, and they're multi-billion
Oh,
dollar investments.
semiconductors. Okay.
Exactly. So like the thing there is that these Fortune 500 companies and these publicly traded companies, they have teams
Yeah.
of engineers, geologists, they have surveyors. They're not going to run out of water in that capacity. And
Yeah.
there's more to it than that, but generally speaking, like that's a good indicator of like
Indication.
where we
Yeah.
into. Yeah, exactly.
Well, and that's I have it is by no means scientific, but it is a Walmart rule of thumb for investing. If there's a Walmart within 10 miles of the thing that I'm buying, I can be I can have a little bit more confidence that that is a good area. Walmart
Yep.
does their research. They have, so many people on staff that are looking at these areas, looking at demographic growth, looking at job growth, and they choose well. And so, if you can find a big corporation, semiconductors obviously huge, like that, and then just follow them, that makes a lot of sense to me. So, all right, let's talk about capital raising. That is what you do. That's your focus. Capital raising is difficult. I tried my first deal; it was a shit show, and I just didn't know. I didn't know what to do. I didn't know when to do it, and I feel like that is also um, part of the nuance of capital raising is doing everything in the correct order at the right time. So why don't you take us to I don't know how to start this. Take us to capital raising. What are the first few things that people should know when they take the perspective of somebody who's just starting to raise capital? They're just going into their first deal. How to do it?
So I know that your audience is not a ton of beginners, but I just want to first state that there's basically three ways to raise money. One is as debt, And typically that's like a hard money loan. Hey, I'm going to buy this real estate. I'm going to borrow money from you at 8%, and I'll use real estate as collateral for the loan. And if I ever don't pay you a monthly interest rate, you can foreclose and take the real estate. That's like the most simplistic way. You don't have to explain the business plan. You just say, I'll pay you 8%.
Hmm.
The next, like more advanced version of that is maybe that investor says, well, 8%'s not really good enough. I know you're making a killing on this deal. How about we do like 6% cash flow and I'll get half the upside or something like that. So then we go into this thing called a joint venture, which is the second way to raise money, which is like there's two of us. We both have material control and we're both kind of equal playing field or equal seats at the table. Maybe you're doing all the work and I'm just putting up the money, but the reality is from an operating agreement standpoint, we both have seats at the table.
Yeah.
The third way to raise money is where I play, which is the world of syndication, which is now there could be 100 investors and they're investing 50K or 100K each to put down $8 million to buy a $20 million deal. When you start to have like more than, let's say, three or four or five, and certainly 10 or more investors, the SEC, which regulates these matters, because you're such a small investor, you're kind of deferring to someone else's expertise in a material way. And so you're just one of 100, and all 100 investors are saying, this guy, Hunter in this case, is going to implement this whole business plan, and I'm just going to basically defer to him. Now, this isn't the technical definition of it, but that's what most people would consider a security. And when you pull investors together, you're entering the world of securities and syndication, which has legal implications, but it allows you to buy $20 million properties like the one we're about to buy in Phoenix, where there's going to be about, 70 investors.
Hmm. Yep. Yeah,
So that's structure. So that's structure.
I
We,
like putting it that
yeah,
way, kind of putting it in the frame of control. And you're right. You start with just the base level, and that's literally you going to a bank and saying, "Hey, give me a loan for this," and you have zero control. I have all control, and if I fail, then you get the property. And then going up
yes.
to JVs where you're kind of splitting it. And I've done JVs. If you can find a good JV partner, it is awesome. It's a good structure, but it's really difficult to do, on $20 million deals because if you're buying a property for $20 million and you have to put $4 million down, you're gonna have to find that one person to put 4 million into the deal. And then syndications, where just like you said, the limited partners, they don't really have any control. They're deferring to you. You're the person who's making the decisions, the GP. Um, so I like that you put it kind of in that framework. So let's focus on syndications, JVs, debt. That's not really, it's another topic and it's its
Yeah.
own strategy, but let's focus more on the syndication side. Um,
Well, here's the mistake people make. I mean, the mistake people make is that they think because they have the structure and they have the good deal that just money's going to show up. And it's just been
mm-hmm.
my experience. It sounds like it's been your experience that that's not true.
Yeah.
And so what ends up happening is that you know, my show, for example, we've done millions of downloads, but that's not the first show people find when they graduate high school. Your show, you're crushing it. I see you got a ton of reviews, which is awesome, but you're not the first person someone finds when they start to learn about finance. And so what ends up happening is you go on this massive customer journey where you're reading Rich Dad Poor Dad and you're downloading the Bigger Pockets blog, and then you finally found you, and you become a nerd about real estate. And I am a nerd as well. And then unfortunately, you find this amazing, beautiful little deal. And it's like that scene in Tommy Boy, my cute little deal, my funny little, and I just smash it. And the way you smash it is you go to the dentist and the doctor and you start using this jargon that doesn't resonate with them and has nothing to do with their
Mm-hmm.
goals and their pain points. And so
Yeah.
that's what I did on my first capital raise. I maybe was a little insecure about my age, and I just hammered them with jargon they didn't
Mm-hmm.
understand to show that I'm smart, but it has nothing to
Cap
do with
rate,
it.
NOI,
Who
blah, blah,
cares?
blah, blah, blah.
DSCR,
Yeah.
bro. I'm going to take a nap. What I'm worried about is what most high income earners are worried about is making more money, taking care of their family, setting their
Cash
family
on
up for
cash
right.
return. Yeah.
Exactly. And so when you start to speak that language of first asking what their goals are and then painting a picture of how they can go away from that pain and towards that pleasure by investing with you, it becomes a way more seamless sales process. And so I tried to do it on my first capital raise, failed miserably, and then spent the next 15 years figuring out a way to not only do this, but to do it at scale using systems and processes and automations and marketing so that I didn't have to do 1,000 one-on-one lunches to raise $100 million, which I've done, but rather do things like this, podcasting, media creation, where people can consume the same kind of content in a one-to-many approach. And
Mm,
so that's what we do at raisingcapital.com, is help people build a system like that.
nice. I love it. I like that you start with asking their goals, and I feel like that is one of the mistakes that I made when I first started. I was hyper focused on communicating the deal and just like my version of the deal, and and like you said, these people, people who are not in real estate, they don't. They want to understand the gist of it. I'm buying an RV park. I'm buying a self storage facility. They want to understand the high level, but they don't want the details. And if you just flood them with details, their eyes will glaze over and they won't really understand the key part, which is their money will be protected by this property, and it will be generating a return for them. So you start by asking their goals. What is it that you want? What do you want to accomplish? And then you frame the conversation that way. That is super important. And I also like that you said you like to focus on systems and processes, because I do feel like one-on-one conversations, um, they are more effective. But I feel like getting to that stage where you can have that one-on-one conversation, that's the difficult part. And so if you start out and you're just hitting the phones, making calls, reaching out to Granny and all the people that that I feel like is not the most effective way to go about raising, especially on bigger deals, raising capital. You have to create those systems and processes, create content, get the people coming to you. So let's talk about that. What is Let's put on the hat of someone they've done their first deal, they've done a couple deals, they've reached out to their family members, their friends, they've tapped that market out. There's no more money that they can raise from their family and friends. Now they need to raise from people that they don't know, from other investors out there, but they need to get like a one-to-many approach. How do they set up the systems, and what should they be focusing on when they're making that next leap?
So I'll put it this way. Sometimes we'll have people that are thinking about working with us, and there'll be like a bunch of them that don't quite get it. And there's been a lot of questions. I've got my onboarding team. They're like, these people are interested. They're really good fits, but it's not really connecting with them. And I'm like, let's do a webinar just for these people that are on the fence so we can like get them in, before this event or before this thing. And so I'll get on there and this is no disrespect. Like, I know why this is happening. It's why I love to do what I do, but I'll basically be like, hey, so like, how are you guys generating leads? And it's like, there's no answer. I'm like, so what is your like mechanism for like starting this process? And it's like they're living in a world that is 20 years old, and they haven't even thought about, how would I generate a lead?
Mm,
And to me, that's amazing, because like I know how to do that. And it's like taking someone from 0 to 1 is really, really easy, because it's like I don't have to be an expert in marketing to be like, well, you need a lead magnet.
mm.
So like if anyone's listening to this and you've heard about these concepts before, like let me ask you, like just honestly, like what is your current lead magnet? How are you capturing someone's email address? And it can be something as simple as going to ChatGPT and saying 7 things doctors need to know before they invest in real estate. And it'll give you 7 things, and then you'll see the 7 things, and you should be able to write a 7-chapter ebook, which is going to be like
Well,
500 words.
I feel like there's a really important message that you had just in that one line: 7 things doctors need to know about investing in real estate. Because you've already have, you create your lead magnet, but it's oriented towards a specific
Avatar.
persona avatar. Yeah.
Yes.
And so in your mind, if somebody wants to get to that next scale, then they should really start with the person that they're marketing towards, for before they even start setting up their systems.
True, true. And just doing anything is going to be better than nothing, because you've got no way to generate leads. Like if you just go based on your intuition, it'll be better than
Mm,
you doing nothing. Because
yeah.
you probably heard someone talk about this before, you haven't done it yet. So just freaking go and try.
Mm,
But, and this is talking to me, in my past as well, but I'm just trying to help people snap out of it. He's right. you should establish who your dream client is. And this is in marketing what we call an avatar, the people that you want to serve. And once you know that, then you can find out where they're congregating. And once you know that, you can find out what their pain points are, what their goals are, and you can build a brand specifically focused on that so that when you put something in front of them, it resonates as if it's speaking into their soul. It resonates as
Mm,
if they're looking into a mirror when you say, burnt out dentists that don't see a way out of the rat race, click here. They actually pull their car over and click because it uniquely applies to them. It's
mm,
not just
mhm,
noise and people are talking. It's as if they were like, oh my gosh, God is sending me a sign that I need to get this guy's information. And you've got to hit them with that level of intensity in today's world where there's so much noise. And the only way to do that is to make them think it uniquely applies to them. And the only way to do that is to niche down. And so all of this stuff, this has nothing to do with DSCR, cap rates, market dynamics, but this is what will take your business to the next level. And this is not why I got into the business, but it's what I found works. It's the cheat code, marketing, which is short for scalable sales, which is
mm.
what that is.
Yep. So you got your avatar, and if somebody doesn't have a past that they can really focus in on, so, and when I mean say past, I mean like if somebody was a nurse, if somebody was a doctor, a dentist, a
Yeah.
lawyer, whatever, then that is automatically what they will be marketing towards, the people that they already know. But if they don't have that, let's say they I don't want to pick on any profession. If they were a bus driver,
Yeah.
no
Yeah.
offense to bus drivers, but if if they were a bus driver, and there's not a lot of bus drivers out there that want to invest in real estate, and so they don't really have a good persona to work with, a good avatar. How would you coach that person? Would you suggest that they just choose any avatar, because it really doesn't matter, or how would you coach that person?
It matters dramatically. And so you can never set the bar too high when
Mm,
it comes to making the selection. And so if that's your background, then obviously if you're investing in real estate, you went from bus driver to bankroll,
mm,
and the story that I would tell is that story.
mm.
But the thing you want to harp on is the people that have the bankroll, right? So
Yeah.
I'll give you an example. Realtors, there's a lot of realtors out there. And so we work with a lot of realtors that want to raise money from other realtors. They don't have to sell them on whether or not real estate's a good investment. It's a matter of most realtors aren't really using real estate the way it's supposed to be used. They're using it to transact as opposed
Mm,
to create wealth. And so when I have realtors, I'm like, don't just say like realtors, say top 5% realtors or top 1% realtors. And guess what? Most of the people that download your free ebook are not going to be top 1%, but it sets the expectation of what the
mm,
calls are going to be like. I'll give you an example. A friend of mine, Richard Wilson, owns billionaires.com, right?
mm.
How many billionaires do you think visit that site? Not many, but some
Yeah.
do. Right? Because like if you're a billionaire, maybe you'll click around, but like most of the people are probably millionaires though. You know what I
Mm,
mean? Because they're
mhm.
on that journey. So it's like they'll be in the realm of reality of getting there. So I think that that's kind of the way that I would do that. And another example of this is like sometimes I'll find people that are recent college graduates or want to cater to recent college graduates. I'm just like, that is more of a
Mm,
charity, and you should
yeah.
have a charity component to your business, but let's stick to accredited investors. The whole industry is set up to focus on that for a reason.
Yeah. Yeah, makes sense. And we are running down our time, but I want to get through the rest of the pipeline there. So real quick, let's just kind of go through bullet points here. You've created your avatar. You've created your lead magnet. You start marketing. And just real quick on that one, do you suggest people use a specific type of marketing? Podcast, obviously, you're doing it right now, is a good source. Do you run Facebook ads, Google ads? What do you suggest there?
When people are getting started out, advertisements are not the way to go. It's all about organic because most of the time you don't know your voice yet. You haven't gotten
Mm,
in the reps. And I raised $50 million before running an ad, and it's going to be very difficult to run ads effectively unless you've put in a ton of work to
mm,
find out who your people are, what their pain points are, what really resonates. It takes years to do that. And that's what I would say people do. Podcast, it's a no-brainer. If you don't have a podcast and you're listening to this, this is your sign. You should go and create 10 episodes.
yeah.
Just 10 episodes. And all you got to do is do them about the pain points that most of your investors have or the reasons they may not invest with you, right? So address that. Make it easier on your sales team or yourself to raise money by just simply addressing it, AKA, will Phoenix run out of water? right? So of course we have podcasts about that because it makes it easier for us. So there's no excuse there. I'll try to keep it brief. I know it can be long-winded, but that's my answer.
No, I like it. Okay. So the next stage, they've marketed, they have their lead magnet, people are downloading it. Now the rubber hits the road. They've signed up for a one-on-one conversation. How do you take that conversation and how do you drive it to the actual investment?
So first, we can use automation to make this a lot easier. So if someone books a call with me, I will try to knock down as many limiting beliefs as I can before that call.
Hmm.
So I will trigger an automation when they book a call that will probably send them 2 emails a day, which will get them excited about the call, but also address their concerns. So, hey, why should I invest in real estate now when interest rates are higher? Is Phoenix running out of water?
Hmm.
Should I invest passively versus do deals myself? Why Phoenix? These are what people are going to receive in the build up to the call so that by the time they get to the call, most of them will be very much warmed up and excited and ready to learn about the wire instructions or the specifics of a deal. So that's what I kind of do. And then during the call, it's a great opportunity to build a much deeper connection than to just talk about market dynamics. So I really want to ask them about why they want to invest generally. And then I'll probably ask why about 3 more times. And you can get pretty deep with about 4 whys,
Hmm.
right? So it's like
Okay.
this. I want to invest because I want my kids to be able to go to college. Okay, cool. Well, why is that important to you? Well, education is important to me. Well, yeah, but like you said, you wanted to pay, and like that's a big deal, right? Well, yeah, well, the reality is I didn't get to go to a college that I wanted to go to because of money, and I wanted to make my kids be in a very different situation than that. Why is that important to you? Because at the end of the day, it's about legacy, and that's why I'm on the call with you. That's how our sales conversations start. That is very different than me going 17.2% IRR, 2.2 equity multiple over 5 years, because who cares? Let's compete over who's the worst underwriter. So that's how this conversation starts. And from there, now I know the tools that I need to use as a salesperson to show them why the path to getting what they want, aka legacy, is through my vehicle.
Okay. And so you've brought them through the conversation. You've asked the whys. You've figured out why they're trying to invest. You see that they're starting to get bought in. They like the deal. They like you.
Yeah.
They understand what they're doing. How do you, money's not in the bank yet. How do you get the money in the bank? Do you ask on that call, like, would you like to invest? If so, I'll send you the paperwork right now. Do you wait? How does it go from the last why that you heard?
Usually, I will use my emotional intelligence that I've developed, and you should always be developing as well, to find out where we are in this process. How hot
Mm,
or cold is this lead? Is this person ready to move forward? Are they giving me signs like, hey, now's not a good time, given the situation, or I need the money back in 1 year, which wouldn't work for us? Like, are they saying those types of things? Or are they like, oh, this is exactly the kind of thing I would want to invest in? On the warmer to hot range, I'm going to ask them usually for a range of what they would want to invest in something like this.
mm,
So if we were
mhm,
able to get you into this deal, what would be kind of range? Because range, and I use my hands for those that are on audio, I'm just kind of creating a range with my hands. Whatever that means to you, do that because it's not legally binding. It's
mm, mhm.
low risk. It's like I'm 50 to 100K. Cool. I can't be like, okay, well, you owe me 100K. No, it's like ballpark figure here. So I can plan accordingly. And then from there and through that conversation, you can establish, would it be appropriate to reserve this for this deal? Would we use the terminology, do you want to soft block this as you continue your due diligence? Or, you know what, if this sounds good, we can get you in, but I know it's a short timeline. It has to be by Friday. I can send you the legal documents right after the call, and I'll send you a webinar that recorded that kind of backs up some of the claims I made today. Sound good? So that's kind of what it sounds like. Zero sales pressure, zero not taking no for an answer, zero, oh, you need your money back in 12 months. Well, we can probably make it 12 months. All of a sudden, it's going to happen. So I don't do any of that stuff.
Yeah, makes sense. And at what point of the DD period are you beginning the conversations with the investors?
Dude, all day, every day. I mean, pre DD, I mean, you cannot dig too many wells.
Mm,
This is
mhm.
a money making game. So we are constantly raising capital with or without a deal. For context, over the last 14 months, we underwrote 200 deals, put three LOIs out, got one under LOI, and did none. So, but we were constantly talking to investors, constantly
Yeah.
talking and getting excitement and getting engagement. Now we finally have a deal under contract that's set to close. But that was a long year, but we were constantly raising capital.
Yeah. And I feel like that is a thing to underline is you don't need to wait for the deal. You can have conversations before you even have a deal. Just understand, just to understand where the investor is. Let them know the type of asset that you're going after. Just say, hey, we don't have a deal right now, but this is the type of thing that we're going to be investing in. And then once that deal pops up, then you can call them back. You can send them an email, say, hey, we got something. What's a good time to hop on the phone and talk about it? And
Absolutely.
I really want to underline also that you said you underwrote 200 deals and didn't get anything. This last year has been horrible for us as well. It's just been crickets out there, and so sometimes in markets, I don't have a ton of experience. I started in 2019 is when I bought my first commercial property, so it's been 5 years. And I know, other more experienced investors out there, they've gone through multiple cycles, but I think it really is important to understand that it's never it's never good to get into a position, and this is not related to capital, but I do want to stress this because sometimes you'll be underwriting so many deals and you just get to a point where you're like, I got to close something. And you start to go down that road where you're like, I don't care what deal it is, I want to close it. But keep saying no unless it hits your criteria. That's what you guys have been doing. 200 deals, you didn't close one. You threw out a few LOIs, you got one under contract, didn't end up closing it. That shows a lot of restraint and a lot of dedication and focus on your criteria. And if you focus in on your criteria, you won't make bad investments. So yeah, I really like that you said that, especially in bad markets like we're in right now, or like we were in. It's difficult to just keep hitting the pavement without seeing any results. And you're going to want to close a deal, even if it's not quite your criteria, but don't do it because that's when you make mistakes.
Yeah, and you got to learn those lessons the hard way. But I will say that it's just the reason he's harping on this is that it's easier said than done.
Yeah.
If you're a successful person, you probably have a bit of a screw loose because you're willing to do things other people aren't willing to do. There's a motivation in you that's been there probably since you were born, right? That's the reason I took running so seriously. That's the reason I took music so seriously. And so when you are working your butt off and have nothing to show for it, and you've got these insecurities like any normal person does, it can mess with you. But think about it. Our goal was to do 4 deals in 2024. Okay. Deal flow imploded by 85%. So what's 10% of 4? 0.4. So we did nothing. We're right on track. That's the reality of the situation. That's the reality of doing
Mission
15.
accomplished.
Exactly. So, but the good news is the reason there's no deals is that you'd only sell if you were deeply distressed
Hmm.
in my market in particular. So you don't got to do that many. I mean, you guys played with the financial calculator. If you do one deal that produces a ridiculous return, it's like if you did 4 deals that were okay, and doing bad deals is something that will tax you and make you not be able to live very long. So I've learned these lessons the hard way, but this next cycle, man, I'm so freaking excited. All the market movers we're talking about survive till 2025. It's here. So let's go.
I love it. All right, we're gonna stop with that. Again, Hunter, I appreciate you hopping on, but it is time to jump into the quick question round. Are you ready?
Let's go.
All right. Starts with education. Could be any form, could be a book, a movie, a conference you went to, a mentorship program you joined, but I need 2 recommendations, one for general life wisdom and one for real estate.
I mean, Who Not How is excellent for
Mm.
as a book. As far as real estate's concerned, it's a little bit tough. I'd say that the true north is economics, but don't be bogged down in that. You need to understand economics because it makes it easier for you to raise capital because investors are constantly looking for those answers. That's all I'll say. I mean, go J why am I Peterson? Is it Jay Peterson on Facebook? I'll pull it
Uh,
up on LinkedIn.
yeah.
What's his name? Give me a second.
Who Not
CRE.
How, though, I did read that book. That's a really good one. And I feel like it's especially useful for people who find themselves a little bogged down in their business. If you're, maybe you're mid stage and you've started hiring, you have systems and a few systems and processes, but you're still in the weeds, read Who Not How. It'll show you that, hey man, you got to take a break and start focusing on the people and who can accomplish the goals that you're actually looking for, and then bring them on the team. So good recommendation there.
Yep, 100%. By the way, it's Jay Parsons. I would just
Okay.
follow him on LinkedIn and, he has no problem with you repurposing his content in a way and putting it in your own voice. If you need to credit him, do so, but that's a good resource right there.
Okay. Perfect. All right. Next question is for your younger self. If you could go back to the Hunter who was just getting started, just after college, I think you said 2008.
Yeah.
Go back to him, look him in the eye, give him one piece of advice moving forward.
I'm skeptical of this stuff because I don't want to butterfly effect myself out of existence. You know what I'm saying? Because I had a good life, but I would buy deals. I would go all in and buy deals directly.
Yeah, makes sense. Next question. You've already given this to us, but I'm going to ask it anyways. US, it's a big place. There's a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Hey man, no hurricanes, the population growth, you know the story. And we have some water, thank goodness.
There you go. There you go. All right. Next question is about finding deals. It all starts with getting in contact with the seller and penning that purchase agreement. So, what's your favorite way to generate leads and find new deals?
I got a secret one. I just did a podcast about this. Okay, here's the quiz. Is it talking to brokers, talking to lenders, cold calling, direct mail, in-person events? The answer is none of them. It's if you can raise the money. That's actually
Ah,
the answer. If you can raise the money, everything flows to you, my friends. If you can raise the money, you've got all the deals in the world, all the opportunities, all the partnerships, because that's the X factor in everyone's business. That's the thing everyone needs more of. So if there's one skill you want to focus on, if you want to actually increase your deal flow, if you want to increase your reputation, that's the answer, my friends.
love it. All right, next question is about lessons learned. Not every deal we get into goes the way we expect it. In fact, most of the time, something goes wrong and we get to learn a lesson. So, what was a deal that went a little bit sideways for you? And then what was the lesson you pulled from it?
So I'll keep this brief because I know it's a fire round, but you read my book. The timing of my book was interesting. I wrote a topic about challenging situations and what to do about them. So, as of the recording of this, we're in a situation where real estate's down 20 to 25%. At the time I wrote my book, and this is true, you can go and look at the book. In the chapter, Challenging Situations and What to Do About Them, the story I told as an example of a challenging story is that sometime operators are slow to provide their K1s.
Mm,
What? Like that paints a picture of what it means to not experience a market turndown. And so now I know some actual stories of what it means and capital calls and lawsuits and people are upset and thankfully not in our deals we're not dealing with lawsuits and stuff like that, but like I've seen some gnarly stuff in this industry.
mm.
And what I'll say is that it can mess with you and it will make people bail. But that is why it's lucrative because of the downturns, my friends. Without the downturns, why wouldn't you? So if you're going through one of those things, just keep in mind that this is what makes the game actually create generational wealth. It isn't just the easiest game in the world all the time. It's the easiest game in the world for 8 years, and then it sucks for 2 years. And that's what happens every single time.
Interesting. I love it. And so you're saying 2025 is the beginning of the 8 year upcycle?
I'd say that 2025, the survive to 2025 thing is good because it rhymes. Most of the deliveries are going to be coming on in 2024, 2025, but
Mm,
in strong markets, they will be absorbed. And in most of the markets, 2026, 2027, 2028, I mean, it's going to be very one-sided to the benefit of the owners. And
mm.
so I don't know that we'll have this massive run up, but you don't need that. That's not the way the industry is supposed to work. You're just supposed to have it be based on supply and demand. And the 2027 supply and demand story is very predictable and buckle up.
There you go. All right, that leads us to the very last question. This is for the listeners. You have given us a lot to think about. I'm sure people want to reach out, get in contact with you. I know you guys have a conference coming up, Raise Fest, and I myself was going to go to it. Didn't fit into my calendar, but I do want to make it one day. So tell us a little bit about it. Tell us how people can get in contact with you, how they can learn more about the event. And yeah, I'll give it to you.
I appreciate it. So raisefest.com. If you watch the video, you'll get a sense of what it is. And it's not a typical private equity event, but it's a ton of fun. So loud music, excellent dynamic speakers. Yes, we're going to cover economics and how to raise capital and lead magnets and systems and processes, but you'll also have a transformational experience. And if you're going to fly and spend a couple days, I would expect a transformational experience. Like we hold ourselves to a high standard. So check out raisefest.com and I'll see you in Phoenix.
There you go. All right. Well, that wraps it up. Hunter, thank you very much for hopping on the podcast.
My man. Thanks a
Yeah,
bunch.
absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at realestateinvestingclub.com. If you guys want to support the show, just leave us a review on Apple or whatever you're listening to this on. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.